Hi, everyone. It is Tuesday, March 10th, and on today's version of CFRA Thematic Insights, we are looking at market trends and investment themes that could shape tomorrow's opportunities. Today, we are going to talk Strait of Hormuz and insurance implications. I am Stewart Glickman, Director of Research for CFRA North America, and with me today is Cathy Seifert, Senior Vice President and Insurance Equity Analyst for CFRA. Cathy, welcome to today's conversation. And I guess my first question, thinking about the Strait of Hormuz, we know that in the early days of the onset of this war, a lot of reinsurers pulled their war insurance coverage from the shippers that normally take advantage of that. Mm-hmm. I guess the question is, now that we're about a week in, have they reconsidered, have they reinstalled war insurance options for ship owners? And would you say if they have, well, let's stop there. Have they started to do that yet?
I don't have that sense. And I would also say there's very little we're hearing right now from the insurance companies. And, as we proceed in the call, I'll sort of lay out an investment thesis about how you can play this event or react to this event, given several different scenarios. I think one of the things right now is that the reason the strait is closed is because basically the ships passing were essentially deemed uninsurable. And while the administration has proposed a reinsurance, sort of a backstop, that implies that the insurance companies are going to have to step up. And we haven't seen any of that yet. So my sense at this point is they are standing pat.
Okay, thank you. So there's always the chance that, ship owners could say, we're going to throw caution to the wind and go without war insurance coverage. But in your experience, when we've had situations like this in the past, whether it's, Russia, Ukraine, 2022 beginning, the Houthis in Yemen in 2024 with the Red Sea, is it your experience that ship owners do decide to sort of take on more risk that way? Or do they really sort of hold off and look for alternatives first, rather than take on that risk?
Well, you raise an interesting point. And one of the things, and again, I'm coming at this from the perspective of covering the insurance industry and finding investable themes in that space. And so, you bring up the invasion of Ukraine. And in 2022, the insurance market was in a different place than it is today. The market was considered hard. And by that, I mean insurers had pricing power. The insurance market, and more importantly, the reinsurance market, has softened considerably in the last 6 months to a year. And so my concern looking at this from the perspective of the insurance industry is when you have a situation like this, there's always the concern, there's the risk you see, or the devil you know versus the devil you don't know, the risk you don't know. And is there some underpriced risks? There is certainly that chance, given that the market has softened. I don't have the sense that there's a lot of self-insurance on the hull and cargo side, but there may be some self-insurance on some of the infrastructure. And then you run into the situation where this is not just a shipping event. We have a situation where this may be a broad macro event. And not only that, we're talking oil. It's an environmental event. So I think one of the concerns on the insurance side is the degree to which this event sort of reaches its tentacles into a number of lines of coverage.
Good point. If now, worst case scenario, let's say this is a broader macro style event for the insurance industry, how would you characterize how insurers and reinsurers have performed in the past when we've had other macro events like this?
That's a good question. And the one counterintuitive thing about the insurance industry is that sometimes, and this is going to sound a little harsh, sometimes when bad events happen, it's a catalyst for the stocks because these stocks tend to trade on pricing power. Having said that, I think it probably makes sense if we're looking at this from the investment implications to sort of frame the industry along the lines of the degree to which they are economically sensitive. And so I would place the personal line space at one end of this continuum. And by that, I mean primarily auto insurers, names like Allstate, which we have a 5-star recommendation on, and Progressive, which we have a buy recommendation on. A couple of things. They're not going to have exposure to this event. If gas prices continue to rise, driving is reduced. If driving is reduced, accidents are reduced. If accidents are reduced, insurance profits go up. So kind of drop a pin in that. And for investors who are concerned that we're in a situation where this could be a macro event, that's where you want to be. They're also economically defensive because the auto insurance is legally mandated by law. Going a little farther down that continuum, we have the commercial lines insurers, names like AIG, Chubb, Travelers, the Hartford. They all have somewhat similar mixes of business. They vary to some degree. Most of those companies also have a presence in the personal lines market. Chubb, for example, has a very attractive high-end homeowners franchise. But these companies, their commercial lines franchises are a little more economically exposed. And, one of the largest marine cargo insurers is AIG. Having said that, though, that business represents a small percentage of their overall book of business. But I think there is likely to be claims, companies like Chubb, AIG, maybe even Travelers are likely to have claims from this event. I do still think those shares are undervalued, particularly AIG, the Hartford, and Chubb. I think the one thing investors should be mindful of, though, is the risk that you have. Again, as I mentioned, the market had softened, and when market conditions soften, there's always a chance that someone underprices risk. So I think I'd be a little wary of some of the reinsurers where there may be some underpriced risk. Now, a lot of the reinsurance capacity that is serving this market is overseas, and my primary focus are mostly US companies, but that is definitely still a risk out there.
Thanks very much. That was really comprehensive. Thanks for listening today. And for folks who are interested in getting more intel on the insurance industry or any other industry that we cover, please visit www.cfraresearch.com.